Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only, doesn't take your personal situation into account. With all that said, let's get into our first chart. So I've got the starting off with the SP 500, and this is a fascinating situation. A new all-time high in the SP 500 this week. It's also rallying off the 50-day moving average. So this chart has the 50 and the 100-day moving averages, and it's rallying off the 50-day moving average after a brief pause. So for all intensive purposes, this is a bullish chart structure with a clear upward trend. So from that perspective, it seems like a simple case of stay long, let profits run. I think the more interesting situation with this market is, do you buy the breakout to the new all-time high? Now, I'm normally one that says buy into strength, go with the trend. The trend is a path of least resistance. But I think there's a bit of a twist with the current situation, with the current all-time high that the SP 500 has just made. Now, let's jump across and look at a different chart. I'm going to look at the SP 500 on an equal weighted basis. So this is an ETF. This is an SP 500 equal weight ETF. So have a look at this. It's not confirming. It's not confirming the all-time high in the SP 500. So the equal weight, so the SP 500, as we know, new all-time high, but the equal weight, it's trading below its May high and also below its April high. So it's pretty distinct non-confirmation. And of course, the SP 500 is above both. I think the overall structure, when we look at the overall structure of this chart, even going back to the 22 high, looking at the overall structure, I think it remains positive. We have a market that is generally trading above rising moving averages. It's just pulling back to the 50 and the 100-day moving averages now, which is not something unusual within a bullish phase. But at this stage, this is a range-bound market. And this has been the case for the last 2 months. Since the March high, this market has been range-bound. And we now have enough data to draw in an upper boundary for this range. So let's just connect up the March high and the April highs, put a trend line across there, and we can now clearly see the upper boundary to this range. And I think while this trend line remains intact, we don't have upward momentum across stocks generally. Yes, we're seeing in the S&P 500, but we're not seeing it generally. And it's clear as day when you look at the S&P 500 equal weight. Now, some people are going to say, look, it's the big caps, they're leading, the small ones always follow later, they always catch up. And ultimately, I think that may be right. But I think there's a little bit more to this than just saying, oh, look, it's just big caps leading. Let's go and look across and look at the Dow. Now, the Dow Jones Industrial is the original big cap index. It predates the S&P 500. This is the global go-to for the stock market, really. It's the Dow Jones, the original big cap index. And it's not confirming what's going on in the S&P 500 either. It too, like the equal weight, is within a broad range. And that's been the case for the last couple of months. Now, we could see this work its way higher. It's like one scenario is that, look, maybe this does work its way higher from current levels. We could see this like the usual back and forth of an upward advance, and price action like this could develop. But I think even that it's going to take several weeks for this sort of structure to build itself out, if that's in fact what's happened. That may not play out like that either. And I think is happening is I think there's a real possibility that the Dow could spend several more months just within this ranging period, just backing and filling and taking up time, consolidating and really working off this big rally off the October low. It was a big rally, a lot of strength in a 5 or so month period. It's just normal to get that backing and filling as a market consolidates. So then the big question is, why do we get this divergence between the two benchmark indices, the Dow and the S&P? The S&P making new all-time highs, the Dow still a reasonable amount off that high point. And we actually spoke a bit about this last week. It comes down to one stock, really. It comes down to NVIDIA. And NVIDIA makes up about 6% of the S&P 500. And what's really interesting here is in the last 3 weeks, it's up over 30%. And on Wednesday, it was up 5% alone. So rarely do we see such big moves in a key stock. It's the second most valuable stock on the second largest stock on the in the S&P 500. It's and to get these big moves, you just don't see that often. And this is largely why the S&P 500 is hitting all-time highs. In fact, I saw an interesting stat through the week. The S&P 500 gains this year. So you look at all the S&P 500 gains. So let's jump back to the S&P 500 for a moment. So of this rally we've seen through this year, about half of it is due to NVIDIA. So it's a pretty extraordinary thing when you see that type of price action going on. Now, NVIDIA isn't giving any support to the Dow simply because NVIDIA is not part of the Dow. It's not part of the Dow's 30 stocks. That may change, but it's currently not in there. So I think the Dow actually provides a better picture of what's generally happening across the market. And then also we've got the equal weight. And when you look at an equal weight breakdown of the S&P 500, well, NVIDIA then only weights in at 1/500th. So, of course, it doesn't have a great impact. But in the capitalization S&P 500, well, it makes up about 6%, so it has a big impact. Another interesting stat I saw through the week is that the average S&P 500 stock, so the average stock in this S&P 500 is currently about 12.5% below its 52-week high. So just think about that. New all-time high in the S&P 500, yet the average stock is about 12.5% below its 52-week high. So yes, we have the S&P 500 hitting an all-time high this week, but I don't think it's so much a case of a market that's booming. I think it's more a case of one stock that's booming, and that being, of course, NVIDIA. Now, the trend in NVIDIA is certainly up. I'm not one for calling a top. That's not what this is about. It's not saying, look, NVIDIA's gone too far. It's got to stop. I don't know. The trend's in place. If the trend's up, you let profits run. That's my standard way of approaching these markets. But I wouldn't say that this is an asymmetric entry point. So you look at where the 100-day moving average is, look where the price has been this week. It's been as much as 47% above the 100-day moving average. And it's also got that vertical look to it. So I think if you buy the breakout in the S&P 500, to a large extent, what I think you're doing is you're buying into NVIDIA after this extraordinary run. That's why I'd rather use the Dow and the equal weight as a broad measure of what's going on internally in the market. It's so internally, it's not saying the market's in some declining phase, but it's in a holding pattern. You look at the Dow, look at the equal weight, it's a holding pattern at the moment, not a market where most stocks are hitting new highs. I'm long stocks. I'm happy to let profitable positions run. And I'm also using those wide trailing stops, try and see off the pullbacks that we're experiencing in many stocks. The other thing I'm doing is being patient with buying. It's about waiting for the right setups, because unlike the S&P 500, most stocks are not breaking to new all-time highs at the moment. Now, if you're getting some value, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube you're watching. YouTube then just does its thing, shows other people, helps me a lot. Please do those things, like and comment, and hit that subscribe button if you haven't already done so. Now, let's wrap up with a quick look at the small caps. I've got the Russell 2000, and this is another segment of the market that's also below its May and April highs. That said, I think the overall structure, when you step back and you look at this, I think the overall structure is encouraging. We've got the Russell, it's trading around these 50 and 100-day moving averages, and those averages are still rising. It essentially appears to be an ongoing consolidation that's really been going on for several months now. I spoke earlier about being patient, waiting for the right setups. I think this is a case in point. It's a waiting game here. We're waiting for the right setups to get involved. I think what I see when I look at this, I see a large basing structure that formed during 2022 and 2023. We've got an initial move higher, well, what I believe is an initial move higher, and we're now seeing the consolidation of those earlier gains. This could continue to back and fill for several months. So you can't put a timeline on these. You just don't know how long they're going to take. Also, couldn't rule out that we got a retest of the April low at some point. There's a possibility the market could drift lower over several weeks and come back towards that April low, form a larger range. But I do think that the base case is that we look at this as an initial rally, a consolidation, an ongoing consolidation, which very much has the potential of moving higher later in the year. I think the potential of moving back towards these all-time highs is certainly there. But look, I think the big thing now, it's just waiting. It's waiting for a breakout, waiting for the price action to tell us when it's time to get involved. I don't want to preempt the breakout because, of course, it may not happen. Maybe something else happens. Maybe the market rolls over and starts heading lower. So the advantage of waiting is that if it doesn't play out, if we don't get a breakout, well, you don't need to get involved. So I'm not preempting anything. I'm waiting, and I'm ready to respond if we do see a breakout to new highs in the small caps. So look, I think we will leave that there for this week. Thank you for joining me. Great talk to you. Hopefully that was interesting. Hope you get a few ideas. And until next week, I will catch you then. Till then, bye for now.